Hey guys, Stock Saturday, and it's a bit of a better week. Up about 5% this week. Not too bad. No deposits, interestingly. I haven't been ploughing all my money in just this week. Still got a little bit of cash on the side. Have made a little bit more cash available by selling Vale. So I've sort of been mentioning that Rio Tinto, Glencore potentially, and Vale were on the sell list. And yeah, decided to go with Vale. Iron ore prices are looking pretty terrible, and Vale are 84% iron ore. So I would imagine, unless things pick up very quickly, that the quarter three and probably quarter four results are going to look fairly awful. And yeah, I just kind of thought, what's the upside really here? Maybe sort of 15, 20% sort of over the next few months. I'm expecting a hell of a lot more elsewhere. So yeah, sold admittedly at a 39% loss, but you can't sort of anchor onto your price. I'm a big sort of believer in not letting anchoring play too much of a part in portfolio decisions, and yeah, basing it on sort of forward returns. So yeah, Vale has unfortunately gone. I do keep my some of my previous sells and things here, just sort of keep an eye on them, see how they're doing, and yeah, let's have a look at some news. Oh, and just comparing my 5%, I suppose, to the S&P is up 3.78%. We haven't had the sort of crazy gap down, so it's fine to look at the 5-day chart rather than sort of last week. And the Nasdaq is up 5.18%, so I've done sort of pretty much the same as that, which was good. Admittedly, obviously, I lost a lot more on the way down, but yeah, we have to sort of see where the rest of the year takes us. So having a look at Himax Technologies results, it's largely sort of strong quarter but weak guidance, which no one really likes. So weak guidance for Q3, but yeah, Q2 looking pretty good. 239 million revenue, up 15.5% quarter on quarter. The guidance was 8 to 13% up, so that's good. Gross margin sort of in the middle, slightly lower end of guidance, and earnings per share right at the top end. So very nice. Some of the sort of broken down revenue sort of doing as expected, really. Automotive sales 40%, over 47% of the total, which is very strong. That's what we like to see. The automotive side is sort of slightly higher profit than your old sort of display, big TV panels and that sort of thing. So yeah, that's good news. And profit-wise, so they cut sort of expenses a reasonable amount, and that has brought net profit up to 29.6 million, which is pretty good. First quarter was 12.5 million, and this quarter last year was nothing, essentially. 0.5 cent earnings per share, now up to 16.9, and was 7.1 last quarter. But yeah, the poor guidance. So they're forecasting revenues to decrease 12 to 17% on this quarter. Still around 30% gross margin, but between 1.5 and 4.5 cents earnings per share. So they had 17 this quarter. That's going to be a fair bit down. They're sort of putting this down to China sort of not doing particularly well, holding back from auto sales and all sorts of sales, really. Customer demand or consumer sort of not particularly strong. There's sort of talks of more stimulus potentially in China going forward, but we'll have to see. Certainly in the next 3 months, or already in a month and a half into Q3, and they're sort of not expecting particularly strong results, but I think the next year should do well. And they are noting that their investments are sort of doing reasonably well. They acquired a 5.3% equity stake in FOCI, sort of a fibre optic company, and they have part of their drivers and things going in cables and sort of used for all sorts of things really. AI and high performance computing, obviously on the rise. They're not a particularly big company, but yeah, nice sort of potential growth. And Obsidian, we sort of noted last quarter, I believe, the thermal sensor company, sort of using that for potentially self-driving cars, drones, surveillance, sort of anything that needs thermal sensors in sort of low light environment. So pretty nice. And they still have their WiseEye side, the sort of AI sensing technology. So potentially sort of smart door locks and that sort of thing. They're talking about this palm vein ID sort of verification. We haven't really seen a huge amount of adoption just yet, but yeah, the WiseEye sort of eye tracking was used in the Dell laptops. So yeah, they do get some traction, but good to see them sort of diversifying away from just display drivers. And just checking the balance sheet, not looking too bad. Cash a little bit down from previous quarter, 261 million down to 236. They have said this will be going down further. They've got sort of 50 million dividend to pay, and I think about 30 million in employee bonuses. These are sort of long-term, invested, sort of long-term vested interest bonuses, I suppose you'd say. But yeah, it's up from, current sort of cash is still up from this quarter last year. Still got their sort of current debt on the go, and long-term unsecured borrowings came down ever so slightly. But yeah, not a huge amount of change there really. So it doesn't look too bad. I wasn't expecting sort of huge things with a lot of their business being in China, and China sort of struggling at the moment. But I think the next potentially quarter four will start to look up, and sort of next year, my sort of option side is really sort of contingent on next year. So we'll have to see how they do. And back to mining, because I do love a bit of mining. KGHM, the copper and silver miner, probably one of my favourites at the moment. That is all of the mix, copper and silver, and I do like that mix. So rather than sort of your, people turning to Vale and Rio Tinto and that sort of people like that as copper exposure, it just really isn't at all. As I say, Vale are 84% iron ore and about 9% copper, so that just isn't copper exposure. Whereas this is. So they're sort of pushing their renewable side. They're looking to generate 50% of energy consumption from their own renewable sources by 2030. 2020 they were at 22%, and it's looking like they are still at 22% or 21.3. So they've gone down slightly, but these are sort of long-term, plans that they're putting into place. So yeah, that's sort of good to be seen trying to go a little bit green. I do like this table as well, sort of comparison of current results against sort of long-term goals, which is good. A 2030 goal is 600,000 tonnes of copper from the domestic side. This year they've done 292,000 in the first half, so not too far off that really. And the international side, 65,000 tonnes in the first half. That is a bit down from 2020, but they're sort of looking to extend those life of those mines on the international side. So not too bad. I'll be happy with sort of 600,000 to be honest. And silver production, they're looking to be at 1,200 tonnes per year, and they've done 678 tonnes in the first half. So a fair bit more than that. That's sort of 1300, 1320, which they've done in 2020. So they're saying it's going to decrease slightly, but they'll still be top three in the top three producers in the world, behind Fresnillo, and I'm not sure what the other one is. I think they're second at the moment. But yeah, that's a really, really good amount of silver for a not particularly expensive miner. So I do like that. And as I say, they're looking to produce 1.5 terawatts of energy. They've done 341 in the first half. That's, looking to be greatly increased. Recycling of scrap is nice as well. 124,000 tons in 2020, and they've done 87,000 in the first half of this year. So that's a significant increase. They want to get to 350,000. So again, sort of a little bit more green. So just looking at their sort of headline results, group revenue is down 2%, not too bad. Sort of copper prices a little bit all over the place, but EBITDA is up 35% compared to first half last year. So that's very good. This is sort of largely down to reducing costs, so that's good. Obviously, unlikely to drastically increase profit on reducing revenues without sort of costs coming down. Yes, you can see where the sort of increase in EBITDA has come from. Overall, as a group, the costs are down. C1 costs are down, so that's not all of the costs, but yeah, sort of cash costs is down from £2.95 a pound to £2.76. This is largely on the international side. The sort of main domestic side is down 1%, $3 exactly. But yeah, the international, which is a much smaller side, is down from $5.29, so it was loss making, to $1.87, so a dramatic reduction. They're saying this is down to sort of higher grades basically, and they were struggling with sort of technical problems on that side. The Sierra Gorda, sort of smaller international side, increased 27%, but it is still, 189, so that is very, very low. And just on the balance sheet side, so it looks like debt increased slightly, but cash has increased a fair bit more, sort of off the back of this rise in profit. So net debt to adjusted EBITDA down at 0.7 now. That's pretty good. Net debt at 889 million USD. So overall, looking pretty good. I do like that they highlight sort of solar panels, and sort of, I guess they're pushing that, they're developing their own energy through solar panels. I sort of focus more on silver being used in those solar panels and driving the silver price, which I don't think a lot of people have sort of really paid attention to yet, but hopefully that's still to come. And 47 closing on 50 million ounces of silver a year should see them very well, which I think people still just sort of focus largely on the copper side. But yeah, I do like them. So just looking at a bit of economic news, we had sort of some unusual results from the UK on the sort of job side. Unemployment claims sort of drastically up from expectations, but unemployment down. So that's a little bit odd, 4.2% unemployment. CPI numbers on Wednesday were sort of slightly lower than expected, so that's pretty good. We did get the first Bank of England base rate cut. US haven't gone just yet, so we've gone ahead of them. A little bit unusual. I thought we would normally follow, but yeah, admittedly our inflation is sort of borderline with theirs, and everyone was saying the US should have cut anyway, and the US numbers came in pretty much entirely in line with expectations, all bar the headline CPI, which was 0.1% lower than expected, below the 3% now. So interesting. GDP for the UK, 0% for June. Year on year, sort of for the quarter, 0.9%. Nothing particularly special. We're not really growing. Jobless claims all sort of a bit better than expected. I think this sort of drove a bit of positivity in the market. You know, good news is starting to become good news as people were sort of fearing a recession. And then you had sort of US or UK retail sales, sort of mixed bag, not on slightly worse than expected, but yeah, nothing much. So yeah, that was kind of it for the news. Just CPI basically, sort of leading to most likely rate cuts, or more rate cuts in the US and the UK. So portfolio-wise, as I say, I sold Vale, probably be withdrawing that cash at some point to put into the interactive brokers side, and yeah, on the ISA, sort of not a huge amount of change really. Up sort of slightly, Clean Spark up a little, the gold and silver miners back to positivity, Cure Mining up above $6 again. Riot still sort of below 8, not particularly good. Still having some thoughts about American Tower and Vici, whether I potentially swap those into one of the miners, potentially Hive Digital. But yeah, haven't done that yet. Equinox, good to see it back above 5, sort of 5.43, very reasonable price. It was sort of under $4 off the back of their sort of, everyone saw it as poor results. I would see it as preparing for incredible results later this year and next year. On the interactive brokers side, sort of Pan American back above 20, sort of not moving a huge amount. KGHM had a good Friday, so they're sort of back into a reasonable profit. And on the invest side, things sort of looking a little up, sort of partly why I haven't ploughed all of my cash in just yet. Sort of certainly Thursday and Friday, things were starting to sort of move up. Equinox, sort of, I haven't bought any this week, but it's closing in on £20,000 now. Is 23% in the red, which not too bothered about. I did buy quite a lot sort of at the lows, where I was sort of 35, nearly 40% down, I think. Coeur Mining I haven't touched for sort of months and months, but that's sort of back up to reasonable highs. Hive I have bought, I think 25 contracts. That is now 18% down. But yeah, for the next year, very, very positive. Riot sort of down. Himax, I think slightly up from last week, but not looking great on the drop in price. Core Scientific just continues to do reasonably well, and Fortuna is down slightly. So yeah, I'm waiting to deploy this cash. Not 100% sure where it'll go. Possibly Riot, because Hive did start to get a little bit expensive, but I would imagine if the gold and silver miners are going to carry on upwards, then I might get a little bit more into the Bitcoin miners before hopefully a decent run up towards the end of the year. So we'll have to see. So leave your thoughts in the comments below and let me know what you guys are up to. Like and subscribe. See you soon.